Welcome back to episode 3 of Everything ETFs.
Woohoo!
We are, already on the third episode. Time is flying by. I'm Spencer Invests, and this is Brad, the income architect. And we're going to do something unique today. We have some market updates, but we're also going to take a look behind Brad's investing journey. And I'm really excited. He's had a very successful career and investing career, I would say. So we're going to pick his brain a little bit and see how he got to where he is now, living basically every person's dream who focuses on dividend or income focused investing. So really excited for this episode. But I want to first ask Brad, how are you doing?
I'm doing great. It's been a busy week. Had a bunch of fund managers on this week. And it's even in retirement, it's not even retirement anymore because constantly emailing,
Yep.
constantly. But it's fun. I totally enjoy it. And it keeps me young. It gives me something actively to do.
Definitely. And it's interesting seeing, we've seen these interviews start blowing up. All of a sudden, every issuer wants an interview, and I don't think it's going to stop anytime soon. This format has kind of taken over for a lot of YouTube channels, a lot of investing content. And I think it's awesome. We get to talk with these
Mhm.
people that are behind the scenes usually we'd never, get to experience these interviews with. But I think it's been awesome. And the interviews have been phenomenal as well. I mean, we both had Cy on this week. We
On
have
the side.
multiple
Yeah.
people coming on next week. It's a busy time, but it's really fun. I love the interview side of things.
And I'm going to the ETF exchange this year in
Mm.
Las Vegas in
Mhm.
March. I was
Oh,
asked if I was going to Future Proof down in Miami, and it's just like, hey, are you sponsoring me? I don't have this kind of money.
yeah.
Because I think one thing I'll say is, yes, I'm getting a free ticket,
Mhm.
but everything else is out of income architect payroll.
Yep.
There is no sponsorship, no travel, no. I might be able to squeeze a dinner out of somebody,
Yeah.
but 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 there is no sponsorship for me to go, and I'm only getting a free ticket, just like every other reporter or media outlet gets a free ticket.
Yep. Yeah, I do love when we get, it's so kind when issuers take us to these places and all this, but I always think, oh, it won't be that expensive. Even if we get like flights and hotels paid for, food and everything adds up to being quite a bit of money. And for me personally, I have to take time off work. So I have to factor that in as well, time
Yep.
away from the channel and maintaining and whatnot. But I think there's a lot of good opportunities this year. There's FinCon as well. I can't remember if it's in Portland or if it's in LA this year, but there's so many different events and whatnot going on, and it stacks up quickly when you start thinking of all the travel costs. So,
That's right. And the beauty of this one is the PR company that's actually doing this actually has a lot of fund managers that I actually interview, and I'll actually
okay.
be able to set up interviews at their in their podcast room. And they even offered, if you do show up, we can use their podcast room to do a podcast from.
Oh, that would be so much fun. Yeah, that would be really
Yeah,
awesome.
it's totally different than having everything professionally set up for you. So
Yes. Yeah, that'd be a really
yes.
interesting experience. Really interesting.
Mhm.
Yeah, we'll definitely see if we can make that work. Jumping into our updates, you approached me this time with some updates on Kurv and Quantify. So you want to relay that information? I was not aware of the Curve stuff whatsoever.
So on January 1st, it's actually end of December, December 29th, but starting January 1st, they're running their single stock funds like they do their gold and silver fund. Everybody thought they were all the same, but they were not. They were totally different. And what Howard calls them is revision two. So we're starting to see better and better funds come out as the SEC loosens up their rules of how things are allowed to be made. And Howard changed the prospectus on all the single stocks to actually try to mimic a whole lot better the underlying stock. So if the
Yeah.
underlying stock starts to run up, you'll see their price also run up. Now, the distribution might go up a little bit, but not a whole lot. That's not where it comes in. It's actually mimicking the price. So even if it goes through the strike, they'll actually be able to start capturing more upside, even if it goes through their call. And
Yeah.
that's totally different. And if people don't know, they can use up to 2% leverage, And all they're doing is buying more puts to give them more upside room if it goes through the strike. And if it doesn't go through the strike, then they don't have to do anything. So
Interesting.
yeah, and the other one we bring up is Quantified. I had David on the channel, I don't know,
David is such a
Wednesday,
cool
Thursday.
guy. He's so
Yes.
unique when in like the ETF game, like such a very he not like quirky. He's just super unique in how he does things and how his
Mhm.
brain works. Like he's such
Yeah.
a cool guy, really.
And I had Zed on too.
Mm.
And their funds are coming out this week.
Do you know
He
what
threw
day they're coming out?
the 21st, supposedly.
21st. Do you
You know,
know
no,
what day they're gonna pay on? That's the question I get asked most when it comes to these weekly pairs.
that's I get that too. It's almost like go to the website.
Yeah.
The
I can't find
SI.
I can't even find it because even from what happened with like TDAX and TSYX, I actually emailed Cy and I asked him straight up, like, "Hey, are these weekly or monthly?" Because the website said monthly for everything, but the prospectus, no, the
It's
fact sheet said weekly. The prospectus
mhm.
said monthly as well. And I was like, "Cy," and he's like, "Oh, we just changed everything. We updated it. It's weekly. It's all current now." And I was like, "Okay, sweet."
Yeah,
But
yeah.
it's hard to tell. We have to just reach out sometimes, and they're so busy, like
And
you said.
his funds will be weekly, but what day? I don't know. That's yeah, come on. Yeah. I'm
Yep.
more worried about will they really truly get us a Delta One position? And for people to just let's throw this out. What is a Delta One,
Mhm.
right? Or a beta of one? Well, a
Mhm.
beta of one or a delta of one means, hey, if the stock goes up 10%, you should theoretically see about a 10% rise in the ETF price.
Mhm.
And that really is interesting because that's been the whole trouble with a lot of funds is they're not following the actual stock price or index.
Yep.
So coming out with something like that really makes it good. The other one is how they're going to use leverage because a
Mhm.
lot of people like, oh, they're going to leverage up, but they're leveraging up two separate different assets. So you're not making twice as much risk on SPY. You're
Mhm.
you got one set of risk on SPY and one set of risk on Bitcoin. And and I said I thought it was interesting because if I had $100,000 invested, $50,000 in stock, and $50,000 in Bitcoin, I could buy his fund and still get for $50,000. So I take away $50,000 so I can have $50,000 exposure to the S&P 500 and $50,000 in exposure to Bitcoin. That leaves me $50,000 I can allocate to something else.
Yes.
You know, be
It's such a good idea. It really is
yeah,
such a good idea, the way that they split those, and we've seen a number of them because there's one that's on Bitcoin and the S&P that I've seen,
yep.
from Cyber Hornet ETFs, and there's, like, a number of other ones that they're launching with other cryptos, XRP, Ethereum, and so on and so forth, and it really does give you a lot of capability for that fee, right? If you have a small portfolio, you can get a lot more exposure, double the exposure to the market,
Double the exposure.
which is
That's right.
amazing for
It,
yeah.
and if you're and we talked about this for younger people, you might want to look at this a little more seriously because it's a good way of using leverage
Mhm.
without getting all leveraged up in the S&P 500 and the S&P drops. Well, that's not
Yep.
so good. Or if
Yep.
Bitcoin drops, that's not so good.
Yep.
So it's a different way of leveraging up. Again, it'll be a small satellite holding for me once I see how they do their calls. But
Yeah.
again, I think Zed said it best was you'll see them actually buy some puts, sell some puts to make sure that they maintain that Delta One and actually
Mhm.
track the price of Bitcoin and track the price of S&P 500, which is totally different than what we've been seeing from other people.
It really is game changing because you could have the whole argument of growth versus income turned on its head if you all of a sudden are able to get more exposure, and that's something that I always go back and forth with. I am a single stock picker. I like dividend stocks, and this is kind of my my long-term goal, right, is to find those stocks that outperform the growth because you have dividends and compounding. Things like Main Street Capital, ARCC for a period of time, Blue Owl Capital, and so on and so forth. And so it's so cool that we're seeing these shifts. And I think if anyone's going to do it, we're going to see it sooner rather than later, as we've seen ETFs adapt and shift completely over the last 2 to 3 years. It's funny to think about, Brad. How long have you been making content for?
18 months.
18 months. So I just hit, I think, my 3 year mark, about two
Wow.
years of doing it really seriously. And I was looking back at some of my older content and I was like, back then we had so few options, right? There were no weekly dividends. Everything was monthly. And I talked stocks and ETFs, but it was just kind of the main, like there were like 5 or 6 income ETFs that quickly changed and shifted over. And it's so crazy what we're seeing is this like speed up, this rapid acceleration of these ETFs and how they're utilizing options in different ways to help us, really. I mean, yes, they're making money off of it, but that's the beauty of this like capitalistic market, is the thriving side pushes all these issuers to utilize options in a different way. And yes, we are seeing an increase in risk, I would say, with more leverage and whatnot. But I mean, long term, I think it's really interesting to see where the ETF space has shifted to.
Yeah, and let's face it, I don't do any closed-end funds. They're just not right for me.
Hmm.
Other people do them. I mean, you can look at ADX, and ADX actually uses a little bit of leverage, and I know that's a closed-end fund, but if I was actually going to buy closed-end funds, I would actually own CEFS
Mm.
ETF, where they pick the best closed-end funds,
Yep.
and they are activists and know what's going on within the fund and manages it for you. So again, we're going back to an ETF
Yep.
that holds other closed-end funds inside of it in an
Hmm.
ETF wrapper to make it more actual efficient for taxes. And you just sit back and go, the ETF wrapper really has changed the world.
It it has, and I want to also reference, yeah, MLPI by Neos. They hold so many of these forms, and I've been doing K1s for
Mhm.
years, and it costs me money. I hate doing K1s. And so you all
That's
of a
right.
sudden, like I'm debating, I haven't done it yet because I do like my energy picks. I have energy transfer, ticker ET. I have ENB. Two of those are both held with the MLP ETF, but I can't stand the K1s. It costs more for an accountant to do them. It's more work. And so it's like, wow, now all of a sudden you're more efficient, not only in how the operation of the fund goes, but your tax side as well. So we're seeing some really new opportunities here, and I'm excited. I'm excited for what we're going to look at, when we hit 2027. That feels so weird to say, but I wonder, we'll look back and go, oh, there were like no options back then. Everything's changed, and it probably will.
Yeah,
But
and for MLPs, you could actually hold a basket of MLPs, but they're actually in a C corp, like AMLP is
mhm,
actually a C corp, which has a 20% tax drag on it because they
mhm,
take all their K1s, they pay the corporate taxes on all that, and then what they issue to you is in a 1099. So
mhm,
you get away from that, but you lost 20% of the distributions because of they have to pay somebody has to
yep.
pay the taxes sooner or later.
Someone's got to pay it. Yep, 100%.
That's right. And we look at, we talked about my journey earlier, and that's, we're going to just segment right into my journey. I did not start income investing until about 2022. It was when I really started looking at it harder. During the pandemic, I learned how to options trade.
Mhm,
2022, I was doing options trading on BITO. I wrote it all the way down. But I read a book by Stephen Bavaria, and it's called The Income Factory. Now, I think I only hold one fund that he holds.
mhm.
I don't hold any other funds that he holds. Right? But I do own one. And when I first started doing this and you watch the channel, I did hold a lot more of his funds.
Yeah.
But what I found out is they just weren't right for me. I
Mhm,
kept the one because it's kind of a hybrid in the credit industry, and
mhm.
it is the only closed-end fund I still own, right? But it gives me a little bit of diversification away from just having business development companies. And I
Definitely.
sit and I sit back and go, it makes sense for me because when I grew up, I started working, I didn't officially start working until 1986, one year I graduated high school, but I
Mhm.
had jobs back in the 80s. I worked at a roller skating rink and I made a little bit of money and I did buy some stocks.
Yeah.
I mean, I remember Motorola and Lucent Technologies.
Yep.
So, Mom Bell, AT&T. I mean,
Mhm.
I still think I still have a stock certificate from, literally a stock
That's
certificate
so
where you
interesting,
you,
and I
you
I
picked
wanna
up
go
the
back.
phone.
Yeah, I have to go. I wanna go even farther, Brad, where how tell me about, like, your upbringing a little bit. Did you talk with your parents about investing? Were they investors themselves? What got you into the idea of investing?
So the investing really, my father was an investor. He was
Mhm.
I'm going to say more of a schemer like me. Is there a
Yeah,
way of making money on something, like a passive income, right?
yeah.
And that kind of stuff. My grandfather had Standard Oil,
Mm,
right? I mean, he grew up through the Great Depression. He had Standard Oil stock certificates,
wow.
right? Which is, so he was an investor, right? And now, you know, 1986 happens. I go work for a major firm and they have this thing called 401ks coming out. And we start talking about 401ks and how the 401k works. So I literally got into this whole thing of, hey, if you put 10 to 15% into your 401k, you'll be just fine. That's literally what they told us back in the day. And I look at that advice today and I say, oh no, that's probably poor advice. But saving 10 to 15%, yes. Saving 10 to 15% all in your 401k, probably not.
Mhm.
But you should be getting the match. What does say?
Definitely.
That's free money. Get the
Eh,
match. But
free money, I love it. Yeah.
you should be doing the Roth. And I just talked to my future son-in-law, and we talked about a brokerage account and said, "Hey, I know your goals. Max out your HSA, max out your Roth. Instead of doing your SEP, maybe you put this in a brokerage account until you own a house."
Mhm.
Different lifestyles, different part of his life compared to me. And like I said, when I grew up, it was all about the 401k and put your money in there. I mean, a Roth wasn't even around when I started investing.
Yeah. Wow. It's so
Just
interesting. I wanna touch on that a little bit, Brad, because the world it seems so weird now. You know, you used to grow up, you buy a house as soon as you could, and I see this a lot with our niche with investing overall on X specifically. It's everywhere, but on YouTube as well, where we have guys that are flashing 100K portfolios, 200, $300,000 portfolios, and there's always a different backstory, right? A lot of these people are claiming to be self-made. I know of a couple that have multimillionaire parents that are pretending like they built these portfolios, and I'm like, how could you even build a portfolio that size only investing in like the S&P, right? Like, so there are certain people that do kind of flash that. But I'm curious your take on this and what you would. It's never financial advice. A whole episode, a whole podcast, not financial advice. But what would your take be for someone kind of in my situation? So I purchased my house when I was 25 years old, and I had to put down about $20,000 in down payment. I took out a loan from my parents for another 10,000. I've been paying them back still to this day. But I'm curious your take, like since I bought the house, the S&P has pretty much boomed and real estate in my area has gone pretty stagnant. I've still made a bit of money on the equity of the house and whatnot. But I'm curious on your take for someone like in your future son-in-law's position, fully investing in the market. Should you focus on real estate? Do you have any long-term plans of purchasing real estate for retirement, things like rentals or even, more properties? I'm curious just your take on that.
that's a really good question. So I personally didn't make diddly from owning a house.
Yeah.
Everything that I made from owning a house either went to the realtor to sell the house for me,
Yep.
or, or personal property tax that the state came back and took from me, or the
Yep.
city. I mean, I was paying almost $7,000 a year in personal property tax.
Wow.
Well, when you sell the house, you don't get that back. And if the
Yep.
house doesn't appreciate six to $7,000 per year, well, guess what? You're not making any money.
Yep.
But at the same time, I'm going to say every person needs to have a castle. S- Something to be said about that. Now, do you own the castle outright? Do you not? Personally, I will probably never own a house again.
Yeah.
That is not my cards. I might have a very nice condo someplace,
Mhm.
or sit at the beach someplace.
Yep.
But at the end of the day, you have maintenance, you have yard care. If I was cutting the grass, I might not be able to make a video.
Mhm.
you know, there's different aspects of your life, that, hey, I think at my point in my life, I'll just get an apartment or a condo and we will continue to move around if we settle down. I mean, who knows if we're even going to settle down, but we'll probably settle down one day. So
Excellent.
yeah, it depends. It depends on where you're at. And that's
Mhm.
all up to the individual. There's actually, you should probably have hard assets like real estate, but it's a long-term bet.
Mhm.
If you're, yeah, we had a house the whole entire time our daughter grew up, and that was
Yeah.
the best. She had
Yep.
someplace stable, that she knew the area. She had her friends there. But after she went off to college, well, there wasn't much there left for us besides some of our friends, and we can
Mhm.
still see them.
Yep. And you don't have to
So,
pay property tax.
and I don't have a 7,000 because I would have that house paid off about now,
Mhm.
and I would still, that house isn't really mine because I would
You're still
still
paying.
have to own that property tax. So you're still paying $500-600 a month and to the state.
Yep. Ugh, it just
You
it
know,
I can't taxes. I can't do it.
yeah, it can't be cheap in California, right? You're in California now, and that can't be cheap.
Oh,
You
yeah,
know,
I'll say my house was just under $300,000 for a very basic starter house, and I don't live
yeah,
in a nicer. I love the area I live in California, but it's not as expensive, as you get in a lot of places, and
yeah.
so even thinking now, though,
You don't live in Napa Valley,
I don't.
right? but
For
but it's a short
300,000 in
drive.
Napa Valley, you're buying a literal shack.
Yeah, yeah.
Yeah, so yeah, it is. There's different opportunities. I like the area and whatnot. And I do think long term it will continue growing. But I mean, real estate for a long time has been a pivotal part of people's portfolios. My parents, they bought their first house for $80,000. They sold it for 200.
Wow,
5 or 6 years later.
they spent a lot of money on that. I mean, I know my
Definitely.
parents' first house was 13,000.
Oh man. Yeah.
I mean that, yeah. We'll just go like that.
Yeah.
Yeah, and she's definitely, my mom's still there and still lives in the same house, and
That's awesome.
she, definitely makes a difference after being there for 60 years,
My goodness. Yes.
right? I mean, I watched YouTube the other day where families have had a castle in England in the family for 800 or 1,000 years.
Oh.
We're not quite there yet, but
Yeah.
maybe the house stays in the family, maybe it doesn't. I mean,
Mhm.
we I think as Americans, we are more transient
Yes.
than, let's say, a European in how they actually live.
Mhm. Definitely, definitely. And that's so interesting. So I'm curious, Brad, going back to your portfolio. So growth, when you look at growth, what were you investing in? What companies were you looking at for your growth portfolio? And what's your mindset? So your growth
So,
for quite a bit of time as you're working, earning
I
money,
mean,
are you just dumping money into as much growth as you possibly could?
so let's face it, they gave you the options of mutual funds with very high expenses,
Mhm.
And that, again, it was a 401k. So I didn't get to pick. That's not 100% true. I got to start picking my own funds, I think right around 1998.
Mm.
They came out with a brokerage. So I could like roll part of my 401k into a brokerage side, still under a 401k, and then start picking my stocks
Mhm.
or ETFs. And I really, I picked growth. I picked the international. I didn't have any exposure to metals because they didn't offer any exposure to metals in a 401k. That was like off limits.
Mhm.
So I would have, a little bit of Russell. I would have some exposure through growth, and I would have exposure through, mutual funds. And that was the
Mhm.
way that they treated you in growing up. I mean, it's totally different today.
Yeah.
Totally. And that's why I say, hey, don't max out your 401k, because unless you have the option of a brokerage in a 401k,
Mhm.
you're stuck with what they say to have. I mean, I
Yep.
still have a 401k at my last company. I haven't transferred it over. And I got like the Russell, I have a growth fund, and I have the S&P 500.
There
That's
you
it.
go.
Those,
Yeah.
those were the options. There was no metals, there was no Bitcoin, there was
Yeah.
none of this. That was not even an option in your 401k. That's why I say don't necessarily you need to max that out. That's why you max out your Roth, and then you can choose your ETFs that you want to choose.
Mhm. Very
Yeah.
interesting. And do you know ballpark how many years you were investing in that 401k and your like total return? Do you have any estimate on that? Like what you initially put in versus what it's grown into?
No, I
Too much
couldn't
to,
even.
to remember.
Funny. That's a funny question. A lot.
Yeah.
It was a lot because somebody. Here's one for you. I'm. I'll tell you how old I am. So I saw this something out on X, and they said, "Hey, you invest $250 a week, and you invest this every week, you become a multimillionaire in X amount of years." Well, I can tell you, when I got out of high school, I didn't make $250 a week, and
Yep.
that was before taxes. So now I look at the incomes are gradually going up, and $250 a week is probably not a big stretch to be
Mhm.
investing.
Yeah.
But back then, 10%, really 10% really meant 20, $30 a week because that was all you were making. Totally difference between making $8, $9 an hour back then.
Yep.
You know, matter of fact, it was when I first started, it was 5.75,
Wow.
and I made up to $9 by doing mechanical trades in
Mhm.
1986. I was up to $9 in like 6 months, right? But $9, that's still not a whole lot of money. I mean, I make that, you know, I make that kind of money, what I was making in a week. I watch my I'll go one farther. I watch my portfolio go up and down every single day, what
Mhm.
I was making in a year back then.
Wow. Wow.
So, yeah, I'll see my portfolio go up as much as I made in a whole entire year 40 years ago.
That's amazing.
Yeah, I mean, I've had days I looked at it and said, well, you know, back in 1986, that would have took me 3 years worth of, working,
Yes.
watching it go down. That's why I'm a little more protective because I saw,
Yeah.
I knew what it took. And I was always invested in the market, except my military service.
Mhm.
At the time, they didn't offer anything to the military service people. Now they have stuff that they can invest in. But when I was in the military, that wasn't even a thing.
Yeah.
You're lucky you got fed 3 times a day.
Yeah. Wow.
And,
That's really interesting.
and I'll even say there was schools in the military that they don't feed you 3 times a day. They feed you once a day. I didn't know if
That's
people
insane.
even they don't even recognize that.
Wow. That's terrifying, honestly.
Yeah,
Oh,
yeah. I
man.
mean, I saw that. Like, I saw this. I see some videos every now and then, and the guy's in the military, and he's like, "Yeah, we're going to put you together. We're going to have you bond because we're going to put you through all the tribulations of the Bible. So you're going to have that, and you're going to have these bonding experiences, and
Yep.
then automatically we're just going to rip you away from all your friends that you just made over the last 18 to 24 months, and we're going to stick you with a bunch of new people that you don't know."
Wow.
And that's exactly what, yeah, that was my life experience. I got to bond with people.
Yep.
I went to my first unit. I got to bond with them. 18 months later, I get shipped out again. I knew no, I was lucky. My second duty station, there was somebody that I was in basic training with
Huh.
that ended up at the same place at the same time at my second duty station.
Interesting. Wow.
So I did know him, but
Yeah.
everybody else, they were all new, new people.
New
So,
people, new experiences. My goodness. Sounds
yeah.
so stressful for someone like me. Yeah. Oh, man.
Yeah, if you were an introvert, ooh,
Yeah,
sorry,
I
man.
wouldn't I would
Eh,
not thrive. Well, that
yeah,
takes a lot
yeah.
of, like, that mental strength as you go through that, Brad, and I'm curious as well, with how long you've been trading for and how you've been, watching the market, you've seen a lot of things go down. You've seen some insane pullbacks, you've seen some insane runs. Can you walk us through a little bit? How has that impacted how you trade? Were you watching in what 2000, 2001 crisis, the 2008
Yes.
crisis, all these different crazy pullbacks? What was
It,
your
it
mentality going through those where people
tough,
were unemployed, they were unable to feed their families, keep their jobs, so on and so forth?
tough. I mean, I was in the Janus fund back. I mean, I actually remember that. I was in a Janus fund back in 2000 and rode that all the way down because back then I didn't have any idea that I could buy a put.
Yeah.
That wasn't even that wasn't even on the radar for me to be even able to do something like that. So I rode it all the way down. I rode the 2008 all the way down. I did not do trading. It was just you wrote it down and you wrote it back up.
Yep.
And you just continue to DCA in the whole entire time. Now, having more experience, starting, and I'm going to say probably starting right around that 2020 time period.
Mhm.
Maybe I'm going to even say it was probably before that. Maybe it was 2018, 2017. Once I got my own, once I started getting my own brokerage account,
Mhm.
and when I say brokerage account within my 401k, because I had a lot of Microsoft.
Yeah.
All right. I went out and said, what does all these ETFs? I wasn't even sophisticated. What do all these
Mhm.
ETFs own? Oh, look, they own a bunch of Microsoft. I think I should own a bunch of Microsoft. I should have bought more.
Mhm.
Right?
Yeah, looking
What
back.
the yeah, looking back on, they own a bunch of Microsoft. That makes sense to me because Microsoft, I use it every day in my daily job. I see where they're making their money. That makes
Mhm.
sense to me. So I bought a bunch of Microsoft stock.
Yep.
I bought some Nvidia, back in the day because I was building PCs and the better GPUs for gaming were Nvidia. So I
NVIDIA.
said, hey, maybe I should hold in some Nvidia. Yeah. And for those new investors, look around. Literally look around. If you're going to start picking stocks, look around for what you use every day and then look at that business model and say, is that really profitable?
Mhm.
And then just do your research on
So interesting. And do you have any big wins that you remember specifically? I mean, like NVIDIA, insane.
it. My
Do you have
biggest
any
win
that
was
come to mind? Like, oh, I made the most
BITO.
money I've ever made on this one stock?
BITO. I keep on
Really?
selling the same story. So
Yeah.
it came out. I bought some. I started trading options on it. I was doing the wheel method. I kept on acquiring shares. I rode it from right around the mid 30s all the
Mhm.
way down to $9.
Wow.
And let's just say it was a lot of money.
Yeah.
But like, it was a lot of money. But then BlackRock says that they're going to come out with an ETF on Bitcoin. The next halving was just around the corner, and it continued to go up. Now, I sold most of that when it was at 70,000,
Mhm.
and then I totally diversified my portfolio away from just Bitcoin
Yep.
because I personally was to the point that I could not stomach that.
Yep.
I could not stomach watching my portfolio drop cent.
Yeah.
And it wasn't a few dollars. It was a lot of money.
Yes.
But I also recognized at the next halving, I had every opportunity to be in the right place at the right time.
Mhm.
I don't think those opportunities are they're few and far in between to do something that big of a bet
Mhm.
on something like that. But, I've seen people out on X got into open. I just shake my head going,
Yep.
I get it. At the right time, they could have got in if they were paying attention, but I couldn't have done a big bet on open. I mean, I got into silver. I saw
Yep.
the I saw the opportunity for silver, and that took off. I mean, my first video on silver, if you bought back then, was over. You made over 100% of your money. But
Yep.
did I go buy $300,000 worth of silver? Not
Yep,
at
and
my.
I wanna mention, Brad, I'm up over 40% on my Nugget NUGT ETF, which I
Yeah,
got from your ex. Now I'm gonna specify this. You did not tell anyone to buy it. You did not say, "Go buy this now." I looked at it, I said, "Oh, it's a 2x on gold. Sounds amazing." I
I,
looked
I
into it, I liked it for my risk, I bought it, and yeah, I'm up over 40% in under 6 months. My silver's nearly that in, I mean, a month or 2 months now. I mean, I saw it
yeah.
jump
So
7 or 8% on what, Wednesday of last week? My goodness, it keeps going. People are worried. The commodities, these metals are just taking off. Platinum as well. Platinum and the copper fund. Do we have any ETA when the copper fund is coming out?
the copper fund, there's a couple copper funds out there already, but
Okay.
I'm assuming you're alluding to the copper fund from
Curve?
Curve.
Yeah.
I'm going to, I'm suspect of when Howard's coming onto my channel and possibly your channel that
To talk
doesn't.
about it.
Yeah, let's just say it's kind of suspicious that he's coming on both of our channels on the same week.
And they booked pretty far out for me. I mean, I've been talking to them for over a month, month and a half now,
Yeah,
and they wanted
yeah,
it around that time. So we'll see. Yeah.
yeah, and that's not the. It's not the first time that he's been on my channel
Mhm.
on the day of a launch,
Interesting.
right?
It's
So
planned. Yeah, it's calculated.
I think it's a calculated risk that put it like this: it's worth me saying, I'll put $10 on it.
Yep.
That week he's coming out with a new fund.
Yep. Definitely. And I'm curious too. So we touched on your wins, how the market swings have impacted you. You made a massive shift going from complete growth to half income and using the income to
Yeah.
live off of.
Hmm.
How was that shift for you?
Yeah. No,
And when did you decide to do that?
it
Was it
is
one day you're
it.
like, I want to retire?
So it really is pretty close. I'm not going to say it's half. It's still a little more growth than it is income.
Yeah.
But at the end of the day, I decided I did not have the mentality that, hey, I'm going to hold 3 to 5 years worth of cash because that's what
Hmm.
these financial advisors tell you is, hey, you can hold 3 to 5% in 3 to 5 years in cash and sell the top of the market for your income. And I'm like, okay, no, that I psychologically that's not how I'm built. It's just
Hmm.
not. I mean, I psychologically think that selling the top of the market is tough to do,
Hmm.
but that's what they are predicting that you can do. And I'm just like, let's say no. I'm gonna say, hey, I can make a steady income stream and live off that income stream. The other one is they keep on saying 4% or
Hmm.
you know, and
4% rule. Yeah.
even the guy that came out with the 4% rule lives on 5%. There was an interview with him a few years ago saying, "Oh, well, I live on 5." Sitting
Yep.
there going, "This is the guy that did the study." And I really think under the current way the market is moving, 8 is probably a realistic number because let's face it, the M2 money supply is going up by about 8% a year.
Yeah.
So if you're sitting in treasuries making 3 to 5, as much as people go, "Oh, it doesn't work that way." Guess what?
Yep.
Yeah, it kind of does.
Yep.
So, it's not a straight line and up and to the right, but it is a fairly straight line. 20% corrections is
Yeah.
okay, but it's still up and to the right. I mean, all you got to do is look at a longer term chart.
Yep. Just zoom out. Yeah.
Just zoom out. Yeah, and it's all about time frames.
Mhm.
Since I'm taking income, I need the income now. Now, and I can understand people holding like Maine and O as single stocks
Mhm.
because theoretically, if you look at Maine, that's actually beaten the S&P over a long period of time.
It
So I
has, and it's, like, pretty substantial. I mean, I'll pull these
yeah,
up. Let's do
it's not even close. So you
yeah.
sit back and go, I can understand people holding Maine and it's a diversifier. I mean, I did one on a very complicated on Friday review from the fund manager, and I'm just sitting there going, somebody said it right. He goes, after 10 minutes of listening to this guy, I started seeing stars and glazing over. If you watch me in the video, I'm like having to explain it back to him just to make sure that I understand what he's saying.
Yep.
And I'm like, and people still make comments of, well, where's the downside protection? I'm like, there is none.
Yep.
Did you not get that through the whole thing? Yeah, there is a barrier. And on that fund, there's a barrier. If it's below that 40% barrier, it doesn't pay. The coupon does not pay.
Mhm.
And at the end of 5 years, if it's still below that barrier, you lose your money.
Yep.
It's gone. The 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 beauty of it is they're doing weeklies and buying more coupons every week.
Yep.
So the chance that all of them are underwater is the chance is very slight. It's very
Yeah.
minimal. But there is chance that it could be underwater.
Definitely, and I didn't realize that realty income is outperforming the S&P on the 1 year, right? I'm talking long-term timeline of outperforming. Man, it's taken off too. It's up 8%, 7,
Right?
8% in the last couple
So
months.
let's talk about that. So because of the debasement trade
Mhm.
and what everything that's going on with the lower interest rates,
Yeah,
Russell REITs, there are a short term, you're going to see a short term boost
a little bump.
on the Russell and the REITs, maybe even some small caps. There's a
Yeah.
small cap 600. You can do a small cap 600. You could do the REITs. If you look at IYRI from Neos,
Has that
I
jumped?
mean, just in the last 2 to 3 weeks,
Mm.
right? Type it in. Yeah, I'll take a look at that on a longer term chart. Hit the five
Yeah,
year.
let's zoom out. If we go 5 years, it's this.
Oh,
Let me check. This is total return. So 5
yeah.
years, S&P has outperformed. 10
But
years.
go back to 5. Okay. When you look at that, when I look at that from my standpoint,
Mhm.
it disconnected from the S&P 500 in 2022.
Mhm.
That's why I personally hold 4% in REITs
Mm.
because of that disconnection. So let's say my SPY-I or my QQQI is going to go down. Well, history tells me that possibly, no guarantee, that REITs will disconnect
Mhm.
and REITs will go up.
Mhm.
The scary part of that is REITs are going up now. What's
Yeah.
coming?
Yeah, what's gonna happen?
you know?
But see here, I mean, we zoom out we're going back to 19 I was born in 97, so we're going back to 30 years, 28
I'm
years.
sorry, I'm laughing, right?
It's alright. It's alright. It's funny because depending on who I'm talking to, it's funny in different ways. Some people think I'm old, right? I have
Well,
friends that were born in the 2000s and family that were born in the 2000s. They're like, "You're old," and I'm like, "Well, the night, yeah, I'm a
yeah,
1990s baby, I guess." But yeah,
yeah. I
all
mean,
depends.
I got out of the military in 1995.
Wow,
Yeah, so you weren't even around yet,
wasn't
and
even around.
so theoretically, we got married in '95.
Yeah, interesting. Yeah, and then 2 years later, it was a
Yeah.
good time, I'll say. Things were different.
Take a look at other REITs. Take a look at IYR. Just go look at the underlying, and you can see how that did not go down as hard during this year. But if you
Yeah,
scan out 5 years, right?
yeah,
That it hasn't really kept pace. But that's why you have the Neos fund where they're paying you 11%.
yep,
So their total returns are going to be better.
yeah,
Right now, that's a good one. If you look at IYR and IYRI,
mhm,
the Neos fund actually is outpacing the underlying
underlying.
because of the options.
Interesting.
Right?
See, what we do,
Makes
Maine, let me make sure it's on total performance too, because Maine is my current
yeah,
largest holding, and I mean, on the 5-year, and this is, of course, Seeking Alpha does dividend reinvestment for all their charts, so this is all dividends being reinvested. That performance is just amazing. I looked at my portfolio, and I'm up 50 something percent on Main Street Capital, which is part of the
yeah.
reason why it's my largest holding because it's up so big. But
I think you can go back to 19. I'm trying to think of the year 2019. Go into
yeah,
2019. About 2019, there was a whole credit thing back in 2019,
yep,
and they had the same issue. They had the same liquidity issue that we just saw recently with the Fed.
yeah,
We saw the liquidity of the Fed back in 2019, where Maine would have took a hit, and
mhm,
then we just saw that again. And I go, the liquidity issue isn't 100% fixed, but they're pumping money into it, and
mhm,
let's even talk about that.
yeah,
So a couple things that happen. The and politics aside, right? Politics aside, there's a bill that got passed this year, early in the year, with a lot of those things didn't take effect until January 1st, 2026.
mhm,
So now everybody's expecting a larger tax return. So the
yep,
Fed said, hey, we need to pump more liquidity into the banking system because of taxes. That's
yep,
because everybody's expecting to get a bigger tax return this year.
mhm.
The average person, right? Except content creators will probably owe money, but that's the point.
Yeah, that's what it seems.
you know, I mean, we won't tell you how that works, but it probably is. I owe money this year, right?
Yep,
But the other one is there's certain tax write-offs that's coming in fourth quarter this year.
yeah,
Second quarter, all the big corporations are legally allowed to bring back money back onto the US shores
mhm,
and pay no taxes on them. So
wow,
if they were over like in uh Ireland, because there's a lot
mhm,
of corporations incorporated in Ireland and they kept all the money over in Ireland, and they didn't bring if you worked for a multinational company, you keep your money where you earn the money, because when you bring it back to the United States, that creates a bigger tax burden on you.
yep,
So not to pay it, you bring it to Ireland where they don't have to pay the corporate taxes on it, and you keep the
mhm,
US in the US. You don't send it to Ireland unless there's all kinds of now comes, I do believe it's late second quarter, there's a tax relief part of that big old beautiful bill
mhm,
that they're going to be able to bring that money back to the United States and not pay taxes on it.
yep,
They're going to, what it'll end up being is what the theory is, they'll be able to invest that money in the United States to build out more plants and more manufacturing and stuff like that.
Yeah.
Does it
Wow.
hold true? I don't know. I mean, that's the guess.
Only
I
time will
can't,
tell. Yeah.
only time will tell. But that's what it was designed around, right? And then fourth quarter, large corporations are able to 100% deduct large corporate purchases. So they
Mm,
go out and purchase something for a few $1 billion, they'll be able to write off that whole entire purchase this year instead of spread it out. I think the normal way of doing that now is 7 years. So
yeah.
you are able to take 1/7 every year. They'll be able to write it off all one time, fourth quarter. So that's another one. That's another interesting one, right? So you can
Mhm.
buy semiconductor chips in a large purchase, right? Or a facility or capital expenditures. Okay, it's more capex than it is
Mhm.
actual spending for manufacturing. So buying
Mhm.
chips, there's a lot of that's more like for manufacturing. Like Tesla buys a lot of chips and stuff like that. Even though Tesla's made their own chip now
Yeah.
for their system, so it's all interesting. It's all you know. We'll see how this plays out.
Yeah, it's gonna be very, very interesting, and I wanted to as we wrap up here, I wanna thank you, Brad, for telling us about your story. It's super interesting, and from my perspective, we've gotten so much feedback from the audience in the comments, and I love it how you and I are at super different areas of our lives, and it's so cool. I think the number one thing, um, that really helps teach people is experience. And so it's a pleasure, it's an honor being able to talk to you about these things and being able
Yeah.
to showcase how you've built this portfolio and the success that you've had with other investors young and experienced and that are about to walk the same path that you've walked or are hoping to soon. And so it's really cool and I think that's something that you can't really typically just generate with content, right? It's harder to, you can't, I can't fake experiences that I've never had. You can try, some people do, but there's something about the fact that you've gone through this
Yeah.
experience that I think is amazing.
I think that most people have not seen their portfolio go down 60% three times.
Yes. I can't even
That,
imagine.
that's tough. I mean, what is 2000, 2008, and then I bought BITO and was wheeling.
Yeah.
Three
Yep.
three times I suffered major losses, but at the end of the day, you don't panic sell. You
Mhm.
hold and ride out.
Yep.
If you were doing some I have a video coming up where the guy's a day trader and
Yeah.
you could have used TradingView. TradingView wasn't a tool back then.
Yep.
Now you can just look at TradingView and I mean, I got it on my phone. I'm like, "Oh, well, maybe I need to get out of the market."
Yep.
So it's totally different today. It's totally different today than it was when I first started.
Yeah. It definitely is. It definitely is. And so that wraps it up. Any final thoughts you want to give to the viewers?
No, I really enjoy listening and hearing people. Just remember, getting hold of these fund managers isn't an easy task.
No.
Somebody's telling me, "Oh, just get them to come back on your show," and it's just like, okay, that's 21 emails later just to coordinate time periods, right? Because
Yep.
some of these guys have gatekeepers, and you have to work through the gatekeeper to even get to the fund manager. And I don't even have some of these fund managers I bring on. I don't even have
Yep.
their email address.
Yep.
I'm lucky. I'm lucky I have 4 or 5 of them on their email addresses. Everybody else, they go through PR firms.
Yep.
So
Definitely. It's tough. It's tough,
it's
but we'll be
tough.
back. We'll be back
We'll be
same time
back.
next week with
And we'll have more. I'll have more fund managers coming on because I scheduled all this stuff. It was easy for me because I don't have a job. And like I said, I'm going to that ETF exchange and they're offering, to schedule up tons of interviews while I'm there. So, hey,
mhm.
maybe I'll get to interview all kinds of people because the chair of
Yeah,
the SEC is going to be out there actually there speaking. So that'll be interesting to hear.
that would be really interesting. 2026 is already looking up.
It looks like it could be a good year. I think it could be a good year once people start getting their tax returns.
Definitely, and we see some of this stuff kind of actually take place, these political things going down and whatnot. Could be.
The incentives, right? I mean,
Yeah.
Honestly, this is recorded on Sunday. I think Monday might be a red day.
Yeah,
Yeah, the whole I'm going to put 25% tariffs on all these
on
European
every
countries because
yep.
they're in Greenland. It's like, oh, okay. But
We'll see.
will
This may be a
will
buying
it's
opportunity.
I will say I think it's more of a buying opportunity because the fundamentals of the market hasn't changed.
Yep, I agree. I agree. Well, awesome. Thanks again, Brad. It's always a pleasure, and we'll be back next
Always.
week.
Take care.